Okay, it says I'm live. It says the event will start soon. Wait for the host to start. To Zoom? Yeah, I see it now. Yes. Okay, got it. Thanks. Right. Hey, everyone. We're going to get started in just a second. Sincere apologies for some technical goofs. So give us just a moment to get our couple of hosts back online here, and then we will jump right into it. What's up, Dan?
Good afternoon, Joe.
We are live, so we're just waiting for Lane to get back on here with us, and there we're going to jump right into it. A few minutes late, but that's all good because we're going to share some knowledge with some folks today. All right, now we got Lane. Here we go. All right, everybody. So sorry for the technical issues that we had, but let's jump into it. Appreciate you all being on. Let's go. So, hello and welcome, everyone. For those that may not know me, my name is Joe Carter. I am the founder of the Twin Flame Group, as well as a partner with the franchise consulting company. I want to thank you so much for carving time out of the midday that I'm sure you are super busy running your businesses in order to join the mid-year value multiplier. How to double or even triple your business valuation in the next 90 days. Whether you're running an independent business or building through franchising, this webinar is for you. The truth is, I've lived on both sides of the table, and that's exactly why I am so passionate about this. I have been the owner pouring everything into a business, and I've also been the guy on the other side of the table deciding what that business is really worth. After over a decade in the corporate space, I made the decision to leap into franchise ownership with my friend and business partner. I got to wear every hat, fight for every customer, and then we sold it. That exit hit a 7-time EBITDA multiplier, more than double the industry average at the time. On paper, it was a huge win. But here's the catch: it also taught me a very brutal lesson. And that was the buyer didn't care about my grind. They cared about my systems, my margins, and whether or not that business would run without me. I left money on the table for myself and my partner because too much of that value lived inside of my head, not in documented processes. So I took that lesson to my next company and I doubled down. That second exit hit over 14 times EBITDA and a 9-figure exit for myself and our partnership group. But even then, I later discovered a $3.8 million revelation, a value gap that I didn't even see until I got the opportunity to work inside private equity. That was a gut punch, a moment where I realized that I had done it again. I had left value behind. And it's also where everything changed for me. I remember after that second exit, I was celebrating with my team, thinking that I had finally won, that it's time to go retire on a private island somewhere. But then I looked hard at the numbers and saw what we left on the table: millions of dollars. Because still, too many of the systems were not fully documented and fully vetted. It felt like losing a song that you had been writing for years. The chorus was there, but you never recorded it. And now I was gone forever. But that moment lit a fire inside me. It stopped being about just being my wins and my exits, and it became about helping other founders and owners avoid that same pain. I don't want you to live through that kind of regret after a sale like I did. Inside private equity, I got a first-hand seat at over 400 due diligence reviews on deals that totaled over $14 billion in business evaluations. And in those rooms, I discovered the 380 specific items that PE and VC firms scrutinize when they value businesses. I've seen how a single missing process can knock millions of dollars off of an offer, or how a documented system can add multiple turns to your valuation overnight. You might have seen my recent work in the Franchise Journal, Texas Developer, Texas Today, USA Wire, and USA Reporter, because I want to share this with the whole world so that you do not live through the pain of regret after a sale. And keep an eye out for my upcoming TV spot on Fox 5 San Diego that's dropping soon. But here's what matters today. Buyers, they are not going to pay for your hustle. They are going to pay for transferable value. And that's what we're going to build together today for your business. So let's dive in. You've heard my story, but now let's turn the focus to you, because this isn't about my journey. It's about your business and what it is really worth. Here's a question I'd like you to keep in mind as we go. Is your business truly worth what it should be? When I ask owners that question, more often than not, I get an answer similar to, of course. But I have sat in the buyer's chair, and I can tell you the market, it often says otherwise. In private equity, reviewing those same over 400 deals, the average company was valued at between $25 and $35 million each. That's over $14 billion in real value that was analyzed line by line. Here's what I learned. Buyers do not just stop at your top line revenue. They dig deep into your systems, your team structure, and your documentation. Sometimes all it takes is one simple question. Do you have that process documented that can move your EBITDA multiplier up by a full turn or make value vanish in seconds? So keep asking yourself as we go through the remainder of this webinar together, if a buyer stepped in the room tomorrow, would they see a company that could run without you? Would they see predictable, documented operations, or a business that is being held together by your hustle? Would they pay a premium, or would they discount your hard work like they did to me? That's how you take what you have built and turn it into a franchise-ready model that buyers compete for. And that's exactly what we're going to unpack together today. Before we jump into it, though, I want to give you some reality check stats. In the first half of this year alone, we have already uncovered over $18 million in hidden valuation gaps on businesses that from the outside look like success stories. Key point though, this is not revenue gaps. This is valuation gaps. It's money being left on the table because of what buyers actually see when they dig in. Over and over, the same red flags continue to pop up. Owners are so critical to the operation that investors back away. Processes that live inside of someone's head instead of on paper. And margins that collapse the second that revenue growth occurs. But here is a success story that still fires me up to this day. We had a client come in with an initial valuation of 3.4 EBITDA, roughly $7 million in value. Fast forward 90 days later, without adding a single dollar of revenue, they jumped to 7.2, over $15 million in value. Exact same team, exact same contracts. Now, buyers are chasing them, not the other way around. So what changed? They had key systems and processes, a leadership cadence that replaced firefighting, and a company that was positioned to be transferable, not just operational. The hard truth is that buyers are not going to pay for your hustle. They're going to pay for what is left standing when you, the owner, step out of the day-to-day. When they see a machine, they will pay premiums, I assure you. But I'll also assure you that when they see chaos that is wrapped in effort, they will discount you. And trust me when I tell you, they discount hard. And that's where franchising comes in. The very same levers that increase your valuation are the exact same ones that make your business franchise ready. If it can't run without you, you can't sell it. And you definitely can't scale it into multiple units that someone else owns and operates. But when your systems are clear and repeatable, you do not just unlock hidden value. You unlock the ability to turn your business into a model that others want to buy into. So as we go, ask yourself, where are your hidden valuation gaps? What would a buyer or a potential franchisee see if they walked in the room today? Because those gaps, they are not just numbers on a spreadsheet. They represent your years of sweat equity that you can either capture or you can lose. And here's what we're going to dive into today and why it matters for you and your business. We're going to talk about why franchising remains one of the safest scaling models out there. Dan, Lane, and I will show you how top operators build transferable value and where others stall out. Even if you never buy into a franchise, these lessons will sharpen your own growth journey. We'll also talk about how to drive 2 to 3 time valuation jumps in the next 90 days. We'll talk about the exact levers, systems, leadership layer, and positioning that will double or even triple your valuation very fast. We'll have a live Q&A to tackle your specific challenges. This is interactive. Drop your questions in the chat at any time, and we will address them live. And finally, we'll have a launch event for your chance to unlock some free exclusive tools. Everyone on this webinar here is going to get our quick win toolkit today. Inside that toolkit, you're going to find 100 proven sales tactics to boost your leads and your conversion rate, behavior insights to sharpen your marketing, a cash crisis playbook to help you stabilize and grow your margins, framework for marketing to align your messaging across all platforms, an HR response framework and interview guides to help strengthen your operations, and operations recommendations, project Gantt charts, and workflow tools to help you streamline execution. But for the first 20 people who book a free call during this session utilizing the QR code, we'll also unlock your custom value roadmap that is valued at over $2,500. And after that call, I'm going to give you a 90-day implementation plan tailored for your business so you can go put it all into action and see your valuation jump. That custom value roadmap has a clear diagnostic of your specific valuation drivers, and gaps. It'll have a prioritized action plan tailored for your business and includes benchmarks and insights that are drawn from over 400 private equity deal reviews. I want to be clear. Booking that call will cost you absolutely nothing except for your time. Time that gives you access to years of hard-won knowledge backed by private equity insights on over 400 due diligent deals. And these are the 5 levers of value that we use to turn a company into an asset that buyers will fight over, not just for a job that you own. The first is strategic clarity. Do you know exactly where you are taking your business? Or are you like me when I used to just chase revenue? Your story should be your North Star. When buyers or franchisees see a defined purpose, guiding principles, and a forward-looking plan that is baked into your culture, every decision points to a bigger end game. That clarity increases your valuation. Next, founder independence. I've said it before and I will say it multiple times. If the business cannot run without you, you do not own a company. You own a job. Franchisable businesses are built upon systems and leadership layers that can operate without the founder. That is when buyers and franchise candidates pay premiums. The third is system architecture. Are your processes documented? If they are not on paper, they cannot scale. Franchises thrive because they hand an operator a proven playbook. Buyers will see risk in chaos and clear systems as scalability. The fourth, financial clarity. Dashboards instead of guesswork. With clean numbers, proven margins, and no surprises. Because in a franchise-ready business, financial transparency is not optional. And finally, brand transferability. Can your brand thrive without you having to be in the spotlight? A franchise brand has to stand on its own. When your reputation and customer experience are built into that system, buyers will see an asset that can grow far beyond you. If you master all 5, here is the truth, because I've seen it over and over again. Buyers will come and they will compete for your company. And then you have the choice whether or not you want to sell. And if you choose to franchise, you've already built the equity and the systems that make others line up to invest in your model. But let me show you how these levers actually play out in the real world. Meet B&B Roustabout. They didn't start with investors or big equipment. Back in 1994, it was literally just a dad in a pickup truck, taking on small jobs in the oil field. His son grew up riding shotgun on those very same calls, learning the business as he grew up. Fast forward a few decades, that son buys out his dad and is now the majority owner. His partner is his best friend, the guy who had been working alongside him all those years, known for fixing problems that no one else would touch. On paper, they had built something impressive. $7 million in annual revenue with 40% gross margin out of one location, crews in the field, and millions of dollars of assets, along with a reputation for getting it done right, getting it done on budget, and getting it done safe. But when we stepped inside, here is what we saw. No documented systems. Every decision and approval ran through those 2 owners. There was burnout everywhere, with long nights, constant fires, and no relief. They were not scaling a company. They were literally running themselves into the ground. Does that sound familiar at all? Because that is the danger zone that so many operators live in, and I've been there myself. The revenue looks strong, but without the structure, you do not have transferable value. And without that, you do not have the foundation to even think about franchising. Because the truth is, without systems and independence, you don't own a business. You own a very stressful job that just happens to give you some income. And no buyer or future franchise partner is going to pay a premium for that. So, what was holding B&B back? The bottleneck? It was founder-driven growth. Every single thing, every decision, every invoice, every fire, it ran through them too. They were the system. Here's the hard truth. There was no SOPs, no leadership layer, no way for the business to run without them. Buyers, they see that instantly. And when they do, they don't see opportunity, they see risk. And here's the other angle. A business that is that dependent upon the owner can never scale as a franchise because without documented systems and leadership layers, no one can replicate that success across multiple locations. When a company cannot run without you, you do not own a business. You own a job. And that's when buyers walk away. Or worse, because I did it myself. They discount you so hard that you barely recognize the offer when it comes through. And it's the same reason that a potential franchise partner would walk away too. Because who would want to buy or replicate your chaos? So here's the shift that we help B&B to make, and the same shift that could change everything for you. We pulled out every process out of their heads and built clear playbooks. We trained their team so that execution did not depend on those two founders. Leverage is everything. Think of it kind of like a content waterfall where one piece of work can be multiplied across as many as 26 different platforms. That same mindset is what you need for your business systems. Build it once and scale it many times over. It's also the same mindset behind turning a strong business into a franchise. Because your playbooks, they become the blueprint that others follow to replicate your success in a new market. That single move unlocked three critical things for the two owners. Time, because they were no longer trapped in every single decision. Trust, because the team knew exactly how to run operations without having to second guess. And finally, transferability, because the business became something that a buyer and potential franchisees could understand, run, and scale. When you stop being the bottleneck and start building documented systems, you unlock freedom and real enterprise value that expands far beyond your own four walls. It is true. I've heard it many times, and I do agree with it, that hustle does build revenue and income. But I assure you, it is systems that build equity. The two owners of B&B, Justin and AJ, they thought growth meant that they had to work longer hours. But what we showed them instead was how to build systems that could run without them. We documented every repeatable process from onboarding to billing, and we trained their team to own them. Then we went a step further. Because in order to do this, you have to realize you are building an empire. And building an empire is a team sport. So when you hire or develop A players, they become weapons for you. Those weapons take on ownership of key areas. And by doing so, you unlock growth far beyond your own bandwidth. The payoff? The founders got to step out of the weeds. The team, they stepped up in ownership. And the business became an asset that buyers value, not just a job with payroll attached. And here's what it looks like in real time. Now, with those systems in place, Justin and AJ have time to spend on strategy, not on firefighting. They've already secured a nearly $2 million job and are in the final sprint to land an additional $7 million job before the end of the year. Those two projects alone will increase their revenue over last year by 33%. Add in with everything else, and they are projecting a 170% increase year over year in growth in revenue. Because the truth is, the fastest way for you to multiply your valuation is not through more grind. It's through building systems and leadership layers that outlast you. Now B&B has a foundation that they can do more than just grow. They have options. They can scale nationwide themselves. They can franchise. They can do many things because their business no longer depends upon them. The transformation that we see over and over again is very similar to what we saw with B&B. Justin and AJ were stuck in what I call operator mode. They made every decision, fixed every fire, and personally reviewed every single invoice before they went out. While that might feel like control, it's actually a cage. By building just 7 documented playbooks, everything from how they bid jobs to how they close out a project, setting a weekly cadence for accountability and leadership, suddenly the team, they weren't just following orders. They were running the business. And more importantly, they were growing it too. That is the difference between being trapped as an operator and stepping up as an owner. When you unlock your time without losing traction, that is when real enterprise starts to build. That's when buyers stop seeing a job and start seeing an asset that they want to compete for. Now, those systems in place, Justin and AJ, they're not just thinking about how to bid their next project. They're exploring how to take this model nationwide through franchising. But let's step into the buyer's shoes for a second. Shoes that I have had the privilege to wear over 400 times in private equity. And truthfully, this is where most founders and owners get a wake-up call. First, can your team execute without you? If the answer is not emphatically yes, buyers don't see a business. They see a job. And who would want to pay a premium to get another job? The same is true if you ever want a franchise. Franchisees will not buy into a model that only works if you are in the room. Second, are your margins consistent and predictable? Because a buyer, they're not just going to buy last year's revenue. They're buying confidence in future cash flow. If your margins bounce all over the place, that confidence in your valuation, it drops very fast. A strong franchise model demands that same consistency so that every unit knows exactly what to expect. Third, is your brand transferable beyond your name? If your reputation is the whole brand, what happens when you step away? Buyers are going to look for a business identity that can stand on its own. And it's the same thing that great franchise partners look for too. Clarity that a brand lives and thrives without the founder having to be in the spotlight. And the truth is, founders, once we've installed them, they love these systems because it frees up their time. Buyers and franchise partners, they love the certainty because it protects their investment. And if you build with all 3 of these questions in mind, you're not just growing income. You are creating an asset that buyers and future franchisees will fight over, I assure you. So now I want to bring in someone who literally lives and breathes this every single day. Lane Klastow is the founder of Franchise Matchmakers. Over the last decade, he has worked with hundreds of franchise brands, helping both emerging and established systems refine their operations, match the right owner with the right concept, and scale in ways that actually attracts serious buyers. He's been in the trenches with franchisees and franchisors, guiding them through everything from initial selection and onboarding to operational optimization and exit strategies. When it comes to understanding what makes a franchise truly valuable, not just on paper, but in the eyes of investors, Lane is one of the best in the business. And here's the exciting part, or at least the one I am most excited about. Lane is my partner at the franchise consulting company. He and I will be working together to help you turn your business into a legacy through franchising. Lane, thank you so much for being on, sir. Please take it away.
Joe, great introduction. I really appreciate that, my friend. Thank you very much for having me here. And like he mentioned, my name is Lane Klastow, the founder of the Franchise Matchmakers. And I'm excited to be here today to share some things that Joe discussed when it comes to businesses, right? So I want to actually start first by kind of telling you how I got here, because my story isn't just about business. It's about a turning point in my life. For years, I worked in the corporate world. I started at the ground level, and I worked my way all the way up to a chief operating officer for one of the largest mining contracting companies in the U.S. On paper, it looked like success. I was leading teams. I was managing a $250 million company on the operations side. And I continued to grow and climb the corporate ladder like I thought I was supposed to. But honestly, behind the scenes, I was miserable, guys. I really was. I was always working. I missed my family dinners. I missed soccer games. I missed moments that I'll never get back. Sure, I was successful, but I had no freedom. I had no balance. And honestly, I had no joy in what I was doing. So that's when I made one of the hardest decisions and best decisions of my life. I walked away from the corporate world. I left my title, my salary, and those 70-hour work weeks behind. And I did this because I chose franchising as my path forward. I bought my first franchise almost 20 years ago. And during that time, I've learned a lot. I've made mistakes, but I learned fast, and I fell in love with the franchise model and what it could do, not just for me, but for others who were chasing the same freedom and control and a better life, right? So what I do today, guys, is I actually help people take that same leap, but I help them take it with guidance that I didn't have back then. And I do this two ways. So first way is I help everyday people become business owners through the franchising model. Like Joe mentioned, through the FCC, we're partners there, and we have 400 top performing franchise brands in our portfolio from every industry you can think of, from wellness to healthcare to home services, fitness, food, and more. You name it, we got it. We have a business model for everybody. And what we do is we help our clients narrow those 400 brands down to about 5. We make a list of about 5, and then we dig into those brands. We help them understand the business model. We help them secure funding. We connect them with the right people, and we do this at no cost to them. You can think of us as real estate agents, but for franchises. I represent them, not the brands. I'm not a salesperson. I'm here to make sure that they make the right decision the first time. And one thing I also like to mention is we really help with territory selection. It's not always about the business. It's about the area that needs a certain business. So we also want to make sure the territory is right for that person in their area. So we do a lot for our clients on that end. And then on the opposite side of that coin, we help successful business owners turn their business into a franchise. So if someone has a business that's working, that's ready to grow, we'll guide them through every step of turning it into a franchise. We're partnering with some of the best teams in the country to handle the legal side of things, the documentation. We build the training manuals. We do the marketing. We do everything. And then once we have that, we also help them grow. We do that through our national expos. We have 12 expos across the country every year. We have the Franchise Journal with 500,000 monthly subscribers. And then we have a network of 200 consultants in every major city across the country that will help you sell and grow your franchise. So at the end of the day, guys, I'm not just in franchising. I'm in the freedom business. So whether you're looking to escape the corporate grind like I did, or you're sitting on a successful business and wondering how to scale it without burning out, well, let's look at franchising and we'll let you know how we can help you. Hey, honored to be here, Joe, Dan. Looking forward to helping everyone through this process. Thanks again for having me, and excited for the conversation to continue. And let's build something together.
I love it. Thank you, Lane. And I absolutely appreciate your insight because you've been there, you've walked it, you've been a franchisee, and now you help others do exactly the same. Just a couple of quick points on the advantages of turning your current business into a franchise. They're listed on the screen, but I want to hit on just a couple.
Yeah.
The ones that were most valuable for me are you don't need capital because the franchisees, they fund your growth. That creates a higher return on investment. It also creates lower risk, lower liabilities because those franchisees, they sign the contracts, not you. So you get to grow faster and scale without having to go hire a bunch of extra staff. You get motivated owners because like it or not, they own it. They got skin in the game. You get better performance. Traditionally, virtually every franchise brand, the franchise units actually outperform the company-owned ones. And you get stronger brand and advertising because the franchisees help you to build it, help you to fund it. So we have a proven franchise framework that can provide you with the capability to give investors predictability, scalability, and equity. So again, thank you, Lane, so much for you being on and sharing your unique insight. I now want to switch and pivot and hear from a different perspective. I've had the privilege of knowing Dan McDonald for almost 20 years now. We have worked for each other and alongside each other at multiple companies. When the opportunity came for me to step out of the corporate world and become an entrepreneur, Dan was one of the first calls that I made. His insight and his vision, because he had walked that path multiple times, gave me the confidence to take the leap. Everything that has happened since, from starting and exiting multiple businesses to now being able to help owners and founders, I truthfully owe a large part of that to Dan. He has worked across numerous franchise brands, including a company that became a franchise themselves. So he knows exactly what drives premium multipliers. Dan, thank you so much for being on as well. And I turn it over to you, sir.
All right. Thank you, Joe. First, I got to say, Lane, where were you 40 years ago in my life? Because I do get to talk about what it was like to be a startup food business up in North Dakota back in the 80s. And we took off like wildfire. It was amazing. On the side of the screen there where it says Burger Time, that was our company that was born in 1987. And we made a mistake that a lot of companies do. We opened up 2 locations. They were both going really well, and we were doing exactly what Joe said. We bought ourselves a job, working a ton of hours. All of our processes, we knew them all because we created them all, and they were all in our head. And decided the only way we could grow, we thought franchising made sense. So that was the route we took. We realized we were horrible franchisors. The systems we didn't have in place showed up very quickly, and we could not sustain what we were doing. Ended up buying the franchise locations back. Took that really bad beating and utilized it over the next about 9 years to grow it to 11 locations in 4 states that were all owned and operated. The only difference is there was a procedure for everything from opening the store to operation, every part of operations. And we did not work in any of the actual stores. And suddenly our profits went up. The value of the company went up to the point that in 2000, I think it was 2001, we ended up selling to a company out of Minneapolis, Minnesota, and they grew beyond that. And they could grow beyond that because they had all of our systems. So again, Lane, really wish would have known you back in the late 80s, would have saved us a lot of heartache and money. But it was a great lesson learned, and it's something that stuck with me as I went on and did other things in the franchise systems. I do want to talk again about what is success, though. And this is a company that both Joe and I worked for, and then Joe became a partner franchisee in, and that is You Break, I Fix. And Justin and David and Eddie, who were the founders of You Break, I Fix, figured it out early. They were able to open up multiple locations in multiple states and not have to go there and run them themselves. They did that while they were building all their processes. So by the time they started franchising, they could show people how you could. Now, there are some people, so I want to say this. There are some people who just want to get out of their day-to-day grind working for somebody else, and they're okay with buying a job. They just need to know that they're probably not going to be able to sell it because it's just a job, or selling it's not going to get them what they wanted for it if they're selling a job to the next person. But many of the owners, and Joe and his partner were one of them, owned multiple locations that with the systems that You Break, I Fix as the franchisor had in place and what they put in place themselves, suddenly they no longer had bought themselves a job. They actually had it so that they did not need to be there. And when the group that actually eventually purchased You Break, I Fix, so David, Justin, Eddie did the ultimate thing is they got themselves set up, got to 500 locations, 480 of which were franchise. They set themselves up to where when the company that eventually partnered with them and then bought them out, they saw that those 3 didn't need to be in any locations at any time, and it completely ran the way it was supposed to go. And the franchisees were the ones that, a lot of them, including Joe and his partner, benefited from this group seeing that and seeing how they could actually run the operations. So definitely the idea behind making sure that you have a scalable business. Make sure you can prove it yourself, though. Make sure you have scaled it a little bit, because again, people don't want to come buy a job if they're looking to actually do more than just work. And then one of the things that I've come across, and this is where I was working when the pandemic hit, I was at Sport Clips Haircuts. So this is company that has over 1,800 locations. They have been going since 1993. Amazing company, amazing founder. And what 2020 taught us is all the systems they had in place for all of those years, for 27 years, allowed them to get through the pandemic, shut 1,800 locations down in less than 3 days from start to finish of shutting them down. We immediately went into the idea of how do we open back up? Who do we have to contact within the state, within the legislature, governor's office, whatever it is, to get our stores open back up across the country? And then how do we open up with all of the protocols? If you all think back 5 years ago, there were a lot of crazy protocols we had to have to be able to open back up. But because systems were all in place, all the training systems were in place with a company like that, we were able to fire right back up as soon as we could within a day or two after we got approval from the state or the city or the health inspector. So that was an amazing experience of seeing what proven systems can do. And unlike a lot of companies that were smaller as far as the individual owners only owning 2 or 3 locations, where a lot of them did not open up a pretty good size amount or number of their locations, Sport Clips not only opened them all back up, they've grown since then and shown that they can continue to grow. And they did this without the original founder, Gordon. He actually stepped aside and let his son take over the business. And Edward continues to run the business today. But they've shown that it wasn't because of Gordon that we made it through it. It was because of the operations. So what that did show us too is during that time, and again, both Lane and Joe have mentioned this, is the folks that only owned one location, they had bought themselves a job. They were a former stylist that bought a location or the location from the owner. As we went through 21, those folks were selling to the larger franchisees. So many of the franchisees that own more than 10 locations use this opportunity to increase the size of theirs. And now they have a business that is truly being looked at by private equity or by a larger franchise system or franchisee system to purchase their 20, 30, 40 locations. So kind of a combination of everything both Joe and Lane have been talking about. It is absolutely how it works when you're trying to either become a franchisee, trying to become a franchisor, or just trying to sell to private equity.
Love that, Dan. Thank you so much. I especially love the story about the company that you tried to turn into a franchise and the lessons that you learned from it. I don't want to jump over anything, but you want to tell everyone what you do today and maybe a little bit of a teaser for what you might be able to provide to them?
Absolutely. So one of the things Joe found out when he reached back out to me, since I've been working for Spartan and Tough Mudder, is that by working with me, he is now expected to run a race with him and some friends and family. And that's on me, by the way. So when we talked about this, what I wanted to be able to do for everybody on here, because I will tell you, and we talked about this before we got on, one of the best team building things I have ever done, I did 7.5, almost 8 years ago with the team we had at You Break I Fix. It was a bunch of younger folks who had never been business consultants in the past. They were amazing managers, super smart, but they had not had to work as a team outside of a store. And we went and ran a Spartan race together. Took 10 people who we were friendly at work, but 6 miles later and through all the obstacles, through the mud, it was a totally different group. And that group stayed there all the way until the company was acquired. So what I'd like to do for everybody on the call, and I believe they'll put my information out there, if you email me at dan.mcdonald@spartan.com, let me know what you want to do. If you want to bring out your current team, 20, 30, 40, I don't care if it's 100 employees. We have races in the US and Canada all year long, coast to coast. But if you want to bring a team out, do some amazing team building opportunity, reach out to me, and it's on me.
That's amazing, Dan. That might be the best free giveaway I've heard ever. on one of these webinars, and I can tell you, I ran a Spartan race, and Dan's gonna make me do it again. It's fun, it's enjoyable, but it is absolutely hard work, and you can't finish it without working as a team. So it is absolutely the picture perfect way to build chemistry amongst your team in order to be able to move forward. Because I know the team that Dan is talking about, I worked with many of them. They were a stronger team after that Spartan race than they were before it. So it wasn't just an enjoyable afternoon for a couple hours getting muddy and having fun. It actually made them much more integrated and able to support and help each other to ultimately help the franchisees at that point. So Dan, I can't thank you enough for throwing out that to our listeners. Thank you. All right, so let's pivot and showcase what else we do. So I'm going to try to tie this all together with what we call the strategic growth blueprint, because truthfully, we do not just help businesses become franchises. We help everyday businesses grow and thrive and turn it into a legacy. This is not a theory. It is a custom map where we measure, architect, and propel, built for your specific business and your specific exit scenario. Because here's the truth. If you do not define your destination, the market will. And the market is not going to be generous. It's going to discount you, and it's going to discount you very hard. Trust me when I tell you that. So how do we build this blueprint? We look at all 5 levers of value we already touched on, but we take it a step further into 10 real-world categories for your business, including money metrics that matter, how you run things, so we create a philosophy and a style, your playing field to understand the industry trends, risks, and opportunities, who you're serving to understand market clarity and have proof behind it, who you're up against so that we can break down your competitors and make sure you have premium positioning against them, how you win to get attention with marketing that will drive your specific needle, where you can grow next, including expansion paths into franchising and elsewhere. We look at who's on your bench so that we can develop your team, align them, and provide that leadership layer I was referencing earlier. We also talk about what you're actually selling, the products and services that you either have today or can install easily that will drive the biggest margin for you. And finally, how you get deals done, sales processes, closure rates, and execution, because this is the depth that buyers are looking for. We are not guessing. We are mapping out exactly where your specific business value is hiding or leaking. Once we have that, we then architect it, putting in systems, leadership layers, and brand assets that both scale and transfer. Finally, we propel, executing and amplifying for growth and for an eventual exit. And something else extra that we bring to the table, I'm also a licensed healthcare broker. So I can help you close the gap with insurance and 401k options that drive employee turnover down and engagement up. A critical layer that small businesses overlook, but does drive premium value. When you run a company through this blueprint, call B&B. They'll answer the phone, and they will tell you that every decision now, hiring, systems, marketing, it all feeds into a business that's not just bigger, but far more valuable. And when you call them, Justin or AJ, ask them 3 questions. Was it simple? Once they had the blueprint, yeah, it actually was. Ask them if it was easy, though. They'll tell you no, it wasn't, because they had to change what they were doing. And sometimes change hurts. But also ask them if it was worth it. And I am very confident that their answer will be an emphatic absolutely. So now it's your move. Please don't just leave this webinar with some ideas. Leave it with your next step. Book your complimentary discovery call with me and Lane utilizing the QR code. We will dig into your exact situation and help you determine the best route forward, scaling a franchise, boosting valuation, or building a company that can just run without you. When you schedule, you're going to unlock all those toolkits that I mentioned and a streamlined strategic growth blueprint, absolutely free of charge. And that is how you make the shift from operator to owner, from just income to equity that buyers are going to compete for. And then you can choose whether or not you want to sell. Is it simple? It actually is once you have your blueprint. Will it be easy? I'm not going to lie to you. It won't, because change is hard sometimes. But will it be worth it? It absolutely will. So let's get you booked. And let's bring it all together before we open it up for some questions, because I've seen several of them already coming through. We've talked about a lot, but the key points that we touched on was why franchising still is one of the smartest scaling plays you can make when you build it right. We talked about how the 5 levers of value can double or even triple your valuation growth in as little as 90 days without adding more hours to your work week. And we also talked about what buyers actually pay for, the systems, the clarity, and the brands that can live beyond the owner. So now it's your turn. Drop your questions in the chat if you haven't done already. We are going to answer them live right here, right now, so that you leave with clarity, not just with a whole bunch of notes. So let's see what we got in our chat going. I got oh my goodness, several chats that have came through. So let's see. The first one, actually, Dan, I believe it is for you. We have Robert from Boston saying, you guys took a ton of deals at Spartan. What made you immediately go, nope, we're out of business? I'm currently in manufacturing and wondering if anyone even looks at us anymore.
So when we have looked at anything, so Spartan, I mean, we're pretty tied into what we can look at. We're going to do something that's in a racing or endurance environment. So right away, we're not looking, I'm not looking at an electronics business for here at Spartan, right? So first thing we do is we're looking at that. We know what it takes to stay afloat, even when you shut an entire company down in 2020 into 2021 worldwide, and we're an outdoor events business. There were no outdoor events going on that they would allow us to put 12,000 people in a confined area. So we learned there, and after we came out of that, we looked at who else made it through that. Because if you made it through that in our industry, that's worth talking to them. So it was a little bit easier for us at Spartan because we were able to look at it. A good example is Spartan acquired Tough Mudder in January of 2020. So if y'all think back, that was a great move in January of 2020. March of 2020, not such a good move because now we had shut down the two largest OCR brands in the world at the time. So when we look at it, we're looking for operations that can withstand what can be thrown at it in our business. And that is, can it withstand labor going up? Because we're a very labor heavy business. So if their margins are so tight that they can't stand or withstand labor going up, can't afford to run in California. California is our biggest market. If they can't afford to run operations in California, we're probably not going to look at them. If their customer satisfaction scores are low, this is a brand where customers are everything. So again, depending upon what your brand is, you're in manufacturing. I would reach out to your customers and find out how you've been serving them, because that's who I'd be serving if I purchased your company. So your customer satisfaction scores, even in manufacturing, I spent a lot of time in manufacturing back up in North Dakota, and we treated our customers. We knew without them we couldn't get anything. You're getting nowhere. So that's one of the first things I'd look at. And that is one of the things where if the customer satisfaction scores are down and they can't withstand an abrupt hit to whatever it might be, we'll go look someplace else, because there's usually enough options that we can look someplace else and find something to acquire.
I love that. Thanks, Dan. I believe the next question's for Lane, because it actually says Lane in it. Lane, I have been looking into franchises for the last several months, but I'm terrified of picking the wrong one. I left my previous company and my 401k with my 401k, and I cannot afford to mess it up. what is the biggest mistake that you see other people make?
Yeah, great question. That's a very normal question, to be honest, right? We all have that same drive to own our own company, especially coming from corporate America. And what I want to start with saying is, first, Joe and I will get on a call with you and we'll get to know you, right? We want to know who you are, what makes you tick, what are you passionate about, what's your previous experience. But previous experience isn't really what's going to take you into the future. It's going to be, how do you want to grow, right? Do you want to work 40 hours a week? Do you want to be semi-absentee? So we're going to figure out everything about you first. That way we can make sure you don't make the wrong mistake, right? Wrong decision along that way. And I love that you have a 401k too, because we'll also look at 401ks, because there's a lot of opportunity with 401ks, especially when you're no longer working for your company, because you can actually use your 401k. You start a C Corp, you can take those funds, you can actually buy shares in your C Corp, and you can pay for your business this way, which is a great opportunity for people that have 401ks. But I also want to look at lending options for you, right? Cash is king. I'd love for you to hold on to cash and maybe get an SBA loan and grow your business that way. So as far as making a mistake, and what do I see could be the biggest mistake, I go back to territories. I really do. I find people fall in love with a business and they want to plug it into the territory where they're living, where they think they can make it work. And if it's not right, it's not going to work. It doesn't matter how great that business is. It has to fit the demographics. So sometimes I got to make people pump the brakes and let them know, like, look, this might not be the right opportunity, and here's why. So we'll go slow, Joe. We'll take our time, and we'll make sure we do our due diligence and just uncover every stone along the way to make sure we never make a mistake.
That's gold right there. So it appears the next question is, it's great that B&B was at $7 million. I have an HVAC company and I'm at 1.8. So does this even apply to me? Well, here's the catch. And this is coming from Marcus. Marcus, here's the catch. Revenue size truthfully doesn't matter. Dependency does. I have seen $900,000 businesses that sell for 5 times EBITDA. And I've seen $5 million ones that sell for 2, because one was owner trapped and the other wasn't. So you're not too small. You're early enough that you can actually build the systems in before any bad habits may actually present themselves. So the fact that you're a little bit lower on the revenue scale can actually pay to your advantage. Let's see. I'm scrolling through. I think I'm coming back to you, Dan. With everything that happened in the economy, are firms even buying businesses right now? And if so, what are the multipliers? My partner and I think we should sell, but I personally think we should wait.
So I would believe you're probably going to have a little more insight on that, Joe, than me, but I can tell you, having just consulted for a private equity company here in Florida that is looking to consolidate an industry that's pretty hot down here in the Southeast. They're actually 100% out there looking for it, whether they're looking to grow themselves into a regional player, because this current industry is not real regional at the moment down here in the Southeast, and that's what they're looking at. You'd be surprised, Linda, I think you'd be surprised on what private equity companies are looking to do. Some of them are looking to buy a good sized company, grow it, try to sell it again. Other ones like this one here, they're looking to make a franchise out of it. The ones I worked with, and talk to them about which local and regional companies or of those companies they should look at buying. But I think, again, Joe and Lane, I think you guys have a little more insight into what maybe is being active out there with private equity.
Yeah, just to add to that, private equity is going pretty hard after several different industries, especially in certain geographical areas, current state. Multipliers vary, truthfully, from industry to industry and geographic area to geographic area. But wherever your industry is at, happy to reach out to you, Linda, and figure out specifically where you're at so we can at least give you a ballpark of what the industry is driving. That is just an average, and it's generally a range that is 7 to 8 multipliers. So a low end might be 3, a high end might be 10. Well, where you fall in that scale depends on everything that you have the opportunity to control. So what multiplier can be driven That's based on everything that we've talked about today. So if there's any missing piece of that, then we're happy to help you close that gap. So whatever that range is, you're on the top of the range versus the bottom. Lane, I think this one's for you. Don't franchisees have all the rules that make it harder to sell, like a franchisor having to approve everything? I currently own 2 Orange Theory locations.
All right. Love Orange Theory, love boutique fitness. Good job owning 2 locations. Why not 4 or 5? Would be my first question. But franchises have systems in place, and that's why we buy franchises, right? So yeah, there are some rules there. Every franchise will have different items in their FTD that will disclose how you sell it. But the whole point of franchising is to buy franchise. You get it at a cheaper cost, you grow it, and you sell it. So it's absolutely not hard to sell a franchise. The franchisors will have a transfer fee. They will want to meet the new owner and make sure that they are aligned with their goals. But overall, it's not hard. You just follow the FTD and obviously keep growing your business and sell it for as much as you can make. Is my advice.
All right. Fantastic advice. So I think we probably have time for one more question. There's many more, truthfully, in the chat. So if we don't get to answer them live here, we'll reach out directly to you so we can get you the answer for the question that you're asking. So I have one for, I'm assuming it's me because it says you sold for 7 to 14 times EBITDA, which sounds amazing. Do you ever wake up and miss it? Like, honestly, I sold mine recently and now some days I am lost. Do I miss it? To a degree, yes. But at least for myself and speaking personally, I found my passion as a result of those 2 things, and that's helping someone else, helping you, helping anyone that I have the opportunity to help. So that drives me, and it takes away maybe that missing piece. So if you sold yours, first off, congratulations. Second off, figure out what you think your next step will be to help you find your passion, whether that's starting another business, maybe going into some kind of nonprofit thing. Find what your passion is, and by doing so, I don't think you'll feel as lost every day. So again, many, many more questions in the chat. Unfortunately, we're running short on time to be able to answer, but we will get you the answers. We'll reach out to you so that we can make sure and answer whatever you may ask. So jumping back in, before we wrap up, I want to make sure that you know where you can meet us in person, at least myself and Lane. The Great American Franchise Expo is hosting several upcoming events, and we'll be at each of these to meet you, answer your questions, help you map out your next steps. So we got New York and Jersey coming up on September the 6th and 7th, DC the 20th and 21st, Houston on October the 25th and 26th, and rounding out the year, Dallas on November the 8th and 9th. If you're going to be anywhere near these cities, truthfully, this is the opportunity to sit down with us face to face. There's going to be hundreds of franchise brands at every single one of these events, and every one of them have walked in your shoes before. They had a successful business, and they made the step to turn it into a legacy through franchising. So we can sit down with you. We can dive deeper into your business, show exactly how you can scale and franchise successfully. So if you're thinking anything along the lines of, this sounds like a lot, I need somebody to help me walk me through this, these events, they're the perfect opportunity for you. If you want and you're anywhere near these on these dates, reach out to me, reach out to Lane. We will help secure you a ticket, and we can't wait to see you there. So finally, I want to tell you something that comes from my heart, and that is I've been the business owner multiple times, and the mind shift that I made was that I wasn't just building a business. I was attempting to build something that future generations of mine would point to and say, that's what legacy looks like. Something that buyers would fight for, but most importantly, something that my family would be proud of. And that's something that earns you a seat at the table where real value is built. Every founder hits a moment. I hit it multiple times. You can either keep grinding or you can build something bigger than yourself. This is that moment. This is your chapter. This is your shot to go from income to impact. Use the QR code, book your call, get your custom value roadmap, your 90-day implementation plan with all the customization of strategic growth blueprint, and get to work. Let's make your business legendary. Let's make it yours. So thank you, everyone. I sincerely appreciate you all for taking time this afternoon to be with us. I look forward to meeting you a little bit more one-on-one during our discovery calls or during one of these upcoming events. I also want to definitely thank our co-hosts that came on, Lane and Dan. Thank you so much for carving time out of your busy schedules to come on here and drop some knowledge with us. And I cannot wait to see everybody. Thank you so much again. Have a fantastic rest of your day. We will reach out to make sure all your questions are answered. See you, everybody. Thank y'all.
Thank you.
Thank you.